Well, hello, everybody. Come on in. It's Carolyn Williams with Money Reverse. And as I promised you, I am here for Stock Savvy Sessions. Welcome, everybody. Come right on in. And when you join, if you can say hello in the chat and let me hear from you, come right on in, everybody. I see you coming on in. I appreciate that. Let's talk about money. I love to have, kind of like fireside chats, except it's not time for fire. But let's just talk money for 4 days. It's National Financial Literacy Month. And so I want to, every April, I do this. I come live and I just do 4 days of teaching you about stock market. And I also add something to that teaching. So bottom line is, I'm going to teach you how to research stocks. Even if you've never done it before, I'm going to teach you in the next 4 days how to research stocks as if you are going to invest in the stock market. And researching stocks is important because people will tell you that, this is a good stock. I think you should consider this, but I want you to be able to find out for yourself if it's a good stock. So we're going to do a little bit of that for 4 days. And then there's so much going on in the market. And I want to tell you more about that too. So can you just say hello in the comments when you arrive to let me know that you're here? And it's right at time for us to start. So I'm going to get started because I got a lot to teach you tonight. I'm talking about inflation. And there's just so much to it, and it's affecting the market. So, inflation and stock market are hand in hand. The two are just, just hand in hand. Oh, hello. I see someone that saw me on the Marriage Talk Show. Hello, thank you so much. Oh, I'm so excited. If you're here from the Marriage Talk Show, I was on the Marriage Talk Show for the last couple of weeks. And so I heard that several people, said that they enjoyed the show. But if you're here from the Marriage Talk Show, like Maurice, hey, say hello. Hey, Marcine. And Maurice said he's seen me on the Marriage Talk Show. Thank you, Maurice, for saying that. Thank you so much. And then I also see Marcine. Hello, I saw Marcine also in a recent engagement that I do. Let me tell y'all what I do in April. If this is your first time being here for Stock Savvy Sessions, I want you to mark your calendar for next year because every April I do this because April is National Financial Literacy Month. And one of my callings in my business, my ministry, my calling is to really teach about finances. And every day in the month of April, it is my goal to teach everybody something, anybody that wants to learn something. So the goal is to have you know more at the end of April than you did March 31st. So thank you, Maurice said I did a good job on the Marriage Talk Show. Yay! Thank you. Maybe they'll have me back. Well, let's get started. I'm going to get started in a word of prayer. And then I'm going to jump right in because I got a lot to talk to you about. I think I overdid it. If it's too much, just say too much in the comments because there's so much going on in in inflation and in the stock market. Yeah. Let me just get started. Word of prayer so we can get going. Father God, thank you, Lord. I thank you for the opportunity to sit and chat with your people, Lord. I thank you for the gift that you've given me. And I thank you that lives are being transformed as a part of this Stock Savvy Sessions. Lord, I pray your Holy Spirit anointing on each heart and mind, open hearts and minds like no other, that they have an understanding of things that they never thought they could understand before. And Lord, even after this teaching is over, continue to teach like no one else can. You are the ultimate teacher. Continue to teach through your Holy Spirit so that we can continue to gather more information about your financial markets and prosper as you've called us to do in your word. In your son, Jesus' name, I pray. Amen. Amen. Let's get started. Stock Savvy Sessions. I'm going to share some teaching with you And let's just get right to it. Let's just get right to it. Now, this is day one, Stock Savvy. We're going to be here for the next 4 days. So just wherever you're joining me right now, you just be right here on tomorrow for the next 3 days at the same time. And I am going to be here. So with that, I see, hey, Boston, I see my Boston folks said, she says, I'm not going to be able to join you tonight. That's okay. I always love seeing you, Boston. And then everybody here, I'm going to ask you a little later to share with me where you are in the world, where you are in the world. This is our day one and Stock Savvy sessions. We're going to have a biblical investing lesson. And then we are also going to talk about why are we doing this? And then I'm going to start talking about inflation part one. Then we're going to talk about stocks. We're going to talk about how big and how much. And yes, I see the Greens are here. Thank you so much for joining me, the Greens. I love it. The Greens host the Marriage Talk Show. And so they are a powerful couple that host the Marriage Talk Show on Fishbowl Radio Network. They had me as a guest. So if you have not heard this radio show, Saturday mornings at 9 a.m. Central Time on Fishbowl Radio Network Studio A. So I want you to come and also join the Greens. So tonight, let's get started with Stock Savvy. A biblical investing lesson. This lesson is starting small, and it comes from Proverbs chapter 13, verse 11. And this is the New Living Translation. Now, this says, wealth from get-rich-quick schemes quickly disappears. Wealth from hard work grows over time. Doesn't that just sound like wisdom? That just sounds like wisdom. Now, the reason, and this is, again, is Proverbs chapter 13, verse 11. This is the New Living Translation that I read. What it looks like on the screen, it looks like it is a video, and that is because it is. There's a video teaching that we have in Money Reverse University in the Stock Savvy lessons. I'm going to tell you how to register for the free Stock Savvy lessons. Again, it's not going to cost you anything. I'm going to ask you for your first name, last name, and your email address, and you will get in. You don't have to do that. But if you do, there is a video lesson here. It's about 3 minutes. And I really talk to you about not being discouraged with small beginnings. If this is your first time really learning anything about stocks, can you not be embarrassed and just put in the comments first time? Because I want you to not be discouraged if this is your first time learning about, stocks or stock market. And that's what this scripture, I kind of go through a teaching there. So again, in Money Reverse University, the biblical investing lesson, starting small. Make note of this, Proverbs chapter 13, verse 11, New Living Translation. Be blessed, everybody. The information provided here today is for educational purposes only. Any market information that I share is purely commentary and should not be construed as investment advice, nor should the information be construed as a solicitation to buy or sell any securities of any kind. Now, let's talk about first, why am I doing Stock Savvy sessions? I did explain that it is National Financial Literacy Month. So you'll see me do this in every April. It's kind of the end of April now, but I try to do it sometimes earlier in the month, again, because I want to make sure that I get an opportunity to just share some teaching with anybody that's interested. And for all of you, if you don't have a time in which you want to focus on getting stronger in your finances, because we always can, I want you to kind of set April for that. It's National Financial Literacy Month. You can come to Money Reverse. I'm going to be teaching and sharing on my social media on a daily basis. And there's several other organizations around and different people that share. So I do want you to look at, April as a time in which you grow in your financial knowledge. It just goes hand in hand. Now, take a look here. Let me tell you, why do I do this Stock Savvy? When we talk about national financial literacy, the one thing I want to make sure that everybody knows is that what's going on in our financial markets, what's going on in the stock market. Now, if you look at this, you will see here that I have a chart that shows you about market returns of 4 different entities. The first column is the year. The second column is bank savings. You can look here, and each bank saving, by each year, there is a percent. And what this is the historical returns. So far in 2022, if you have money sitting in a bank savings account, on average, you will make 0.06%. Now, interest rates are going up, and as you look down the list, you will see that the 0.06% is the highest that it's been since 2019, since before the pandemic, because interest rates were dropped during the pandemic, and we'll talk about that some when we talk about inflation. So we are seeing interest rates rising, but it's 0.6% is what your money is making sitting in a bank savings. Right now, if you have money in the stock market, there is a bit and this is as of 3/31. So it was a few weeks ago at the time of this recording. If you're looking here, you see that the US stock market is down minus 4.95% as of 3/31. And so we are having a pullback in the stock market right now. And Friday, we had a major pullback. We saw the Dow drop 900 points. So that's where I have a lot to share with you about what's going on. The last 2 columns are the 3-month T-bills and the 10-year T-bonds. This is the bond market. So take a look. 0.68% on the short-term bonds, 3-month, and 2.66% on the 10-year bonds, the long-term bonds. So take a look, though. When you look at today, the bond market is doing better than the stock market, and the bond market and stock market are yin and yang. When one's doing well, the other isn't. That's just the way it works. That's the way financial markets work. But what I do want to share with you is look down the list and look at the previous years of the stock market. In 2021, 28.79%, 18.4% in 2020, 2019, 31.49%. Wow, wow, wow. Look down the line. 2018, we had a negative, but do you see the number of years in which the stock market had double-digit returns? I just want you to know that this has been happening for a long time. Look at the bond market. Look at the returns. I have yet to see a double-digit return. When we go down to 2014, the 10-year bonds, leave it in there for 10 years, you would get 10.75% and then 16.04% in 2011. None of those is even, that's not even half of what the stock market has returned for the last, just look at the last 5 years. Now we are in a pullback right now. The stock market has pulled back, and it's pulled back even more as of Friday. I'm going to share that with you. So this is a good time to understand what's going on, and I'm going to talk about that. So if you're in now and you got stuff in the red, I do too. But I know I'm glad that it's pulling back, and I'll tell you why I'm glad. So I want everybody to know what's going on. Now, what you can do with this information, if you're in the market, whether in your savings, retirement savings plan, 401k, 403b, go look and see what your plan has returned. You want to see how you compare to the S&P 500. You may not be as high as the S&P, but try to be, I'm going to say 5% below maybe, or 5% above, So when I do trading in the market, which I do trading in the market every day, I beat the S&P every year. I have beat the S&P every year for the last 11 years. So I can show you how I do that, and it's just by knowing what's going on. So that's what I'm here to help you know what's going on. That's why I do stock savvy sessions. If this educated you a little bit, when you hear something that educates you a little bit, just say educated with exclamation points. And what that tells me is that you know something in April that you didn't know in March, and that's my goal. Okay? Now, what I'm going to do is kind of go through some of the things that's been happening in the stock market over the last year. Let me lay this out for you. We're going to start here at the bottom. So take a look here. Now, I got 3 major indices: the Dow Jones Industrial Average, the Standard & Poor's 500, and the NASDAQ. I'm going to show you what these stock market indices, which is an indication of what's going on in the market, what they've done over the last few quarters. So let's start at the bottom. March 31st, 2022. Take a look at the numbers. 34,678 for the Dow. Standard & Poor's is 4530, and then the NASDAQ is 14,220. Now, I don't want you to compare the numbers to each other. Don't compare the Dow to the S&P and the NASDAQ. they're weighted averages, and so they're not going to compare. But what I do want you to do is to compare each of these to itself. Compare each of these to itself over time, and that's what I'm going to show you here. So let's kind of show you another one. That was March 31st, 2022, just a few weeks ago. Let's look at what these numbers look like in December. If you look from December to March, you do see a bit of a pullback. 36.3 on the Dow, 47.6. You can see they were higher in December, all of them, than they are right now. Remember I said we're in a pullback. Let's go back and look at September. Take a look. I'm going to tell you a story here and just kind of look at how these numbers are changing. I'm going to go ahead and tell you more. And we can see here in June, I'm really focusing on the Dow. In June, we were at 34.5. In March, which is 1 year ago, we were at 32. So yeah, we got a pullback, but you can see this is higher than it was back in March. So kind of look, I'm going to go ahead and show you all the way since January. Now, January 4th, 2021, at this point, we had COVID vaccines that were almost ready. I think we started, those were released here in the US in March, I think. So we were starting to get vaccinations and starting to see the better side of COVID for us, was the thought pattern. Look what the stock market did all year on all of these indices. From January, it has never been back to the low point for any of these to where they were in January of 2021. So even though we're doing a pullback from a big run that has happened. Over the last 2 years, we have seen, remember, 28% return and 31% return. Stock market has been going up, and I have been making big money in the market, and my traders have been making big money in the market. And that's just because the market has been paying. I want you to know the market has been paying, and the market is pulling back right now. So let me show you one thing. The highest that these numbers have ever been was the first of this year, January 4th, 2022. The Dow hit its high at 36.7. And the one day before that, on January 3rd, the S&P hit its all-time high of 47.96, and the NASDAQ hit its all-time high in November. So the highest these indices have ever been, what happened this year. So after first of the year in January, then we started seeing the pullback happen. Let me summarize the year. So let's do all of that in summary. When you look at the Dow, the S&P, and the NASDAQ, this is what they were on January 4th, the first trading day of the year. Then let's look at the last trading day of the year in 2021. You can see what they were: 36.3, 47.66, and 15.644 for the Dow, S&P, and NASDAQ. When you look at that as a percent, look at what these market indices returned. If you had money in stocks, almost that were like the Dow, if you had money in the stock market, it is a very good chance that you made a 20% return. If you didn't, I want you to look at what you're in, because all three of these indices returned more than 20% in 2021. Now, you say, Carolyn, that's fine and good, but now we're in 2022. Let's take a look at that. Let's look at March 31st, 2022, the first quarter. I do this every quarter for my traders and for my groups. Let's look at the first quarter. The first quarter, this is what I showed you earlier. We're down 4.5%, just about 5% on the NASDAQ, which is a tech stocks. We're down almost 10% at quarter end. Now, let's take a look at what it looked like today, which is the end of the trading day on Friday, April 22nd, 2022. Look at what the numbers were. We saw a huge drop off on Friday, a market sell off. I think the sell off is going to continue some into next week. So I want you to watch. If you're going to be here for the 4 days, I'm going to tell you some things to watch, and we'll get together every evening and I will try to update you on what's going on. So this year to date, as of yesterday or as of today, market is closed. We are down on the Dow for the year, 6.95%, 10.37%, and 17.93% for the NASDAQ. The tech stocks have just crossed correction territory. Market correction is anything a downside of more than 10% since the beginning of the year. So we are in market correction for the NASDAQ. So if you are not in the market, then I want you to know that there is a pullback right now. And so this may be a good time for you to kind of say, things are on sale. That's the way I like to look at it. Things are on sale. So I just want to tell you what's going on in the market. Now, if you have any questions, just post them in the comments there, and I will respond to your questions kind of all at the same time. So definitely, I want you to ask questions. This is a class, this isn't a webinar where you just come on and you learn about some stuff and you don't know what I said later. That's not what this is. No, this is a class. I want you to learn something. Okay. So post your questions. I'm going to get to all of your questions. I want to make sure everybody gets all of the answers that they're looking for. Let's talk about inflation. Does everybody know where we are with inflation? What inflation is a general rise in the price of goods and services in an economy over a given period of time. As a result, a given amount of money will buy you fewer goods and services tomorrow. We all have heard of inflation, and inflation has always been around. Inflation has always been around, but it hasn't been like it's been now. Like it is now. We're at a 40-year high for inflation. So with these are just words. Let me try to kind of tell you in a better scenario what I'm talking about when I say inflation. Let's do it this way. Now, what I did is I went back and I went and looked at some old video of a game show. Does everybody see the game show that I'm talking about here? It's The Price is Right. And I looked at an episode of The Price is Right from February 4th, 1980. If you were not born February 4th, 1980, can you just say, sorry, wasn't here? I want to see how many young people we have here. But when I watched this video of The Price is Right, I saw them say, and contestants, you have the chance to win a brand new car. And the crowd roared. And they said it's a Chevy Citation, standard features, plus tinted windows, side body moldings, power steering, brakes, cruise control, sport mirror, AM/FM radio, dual front speakers, wheel covers, and California emissions. So with that, I want you to see what was the price of this car. This is February 4th, 1980. It was $6,521. $6,521. Now, if you know of a top of the line vehicle that we can buy with all of the features for $6,521 today, if you know of one, can you post the brand, the car, make, and model in the comments? Because I want to know. I want to know. But see, you know that $6,521, that was probably a big price back then. But guess what? You can't buy the top of the line vehicle. We can't buy a Chevy Citation today, but we can buy a sedan. Is it a 4-door, side body moldings? They tell you the features, but $6,521 won't get you a car like that today. Another one that they had on this same show, February 4th, 1980, a brand new car. It's a Triumph TR8. It has standard features plus AC, FM radio, AM/FM radio, and California emissions. So, and then the price of this car. Now, I did look up this car because this company doesn't even make cars anymore. But this was the type of car that you saw in James Bond movies. So it's a 2-seater sports car. So if you know of a 2-seater sports car convertible that is, that you can get at this price, and the price is $9,553, and the person that was playing the game did not win the car. They did not win the $9,553 car. But if you know of a 2-seater sports car that's convertible, top of the line, brand new, that you can buy now with all of the bells and whistles for $9,000, even $10,000, put the model in the comments. The reason that we can't is because of inflation. It's a general rise. And the thing about it, we don't expect to be able to buy this same car at this price. We don't expect that. The reason is that because we know that over a period of time that there's going to be a general rise in the cost of goods and services. And that's what inflation is. So just think about the Price is Right from years ago and then think about today. And that kind of explains what inflation is. Most times it's so slight that we don't really see it, or it's not very noticeable to us. But lately it's been where it has been top of line. It has been something that's been a big deal. What we do is we look at the CPI for this, and this is a consumer price index. And this is a measure of inflation in our economy. The way that the CPI works is they have a certain basket of goods and services, and the Department of Labor Statistics, Bureau of Labor Statistics, is tracking this, and they report this out every month. So with that, you can see that the CPI, let me show you what the CPI has been reporting. The one thing I want you to know, it comes out every month. It's a lagging indicator. And when I say lagging, by the time they report it out, it's already happened. So the numbers that I'm going to tell you about right now are numbers that came out for the month of March 2022. We're deep in the month of April. The report came out in April, but it's reporting March. So with that, that's what the CPI is. And let me show you what the CPI is right now. Take a look here in the red, the two in the red. In 2021, we saw inflation at 7%. As of April 12th, inflation was 8.5%. This is the highest that we've seen in 40 years. If you look at this listing here, you can see what our historical inflation numbers are. And if you look down the list all the way down to 2010, it was 1.64%. So we always see somewhat of a rise, but just not this fast and not this much. Take a look at the yellow ones at the top. These were the projected rates and this was as of, let's see, I think I looked at this in 2019. I started tracking this pretty closely in 2019 when coronavirus hit, because I knew it was coming based on everything that was going on. This is what the projected rates were: 2.5, 2.45, 2.37. And you can see, unless things turn around, we are going to quadruple those numbers, just as we have right now in our current situation. Now, what this means is if you went to the grocery store and you put together a list, if you went to the grocery store on this day, the day of this recording is April 23rd, 2020. If you went to the grocery store on April 22nd, 2020, then bought, same grocery store, bought the exact same list of items, same size, same amount of butter, same amount of dishwashing detergent, same amount of toilet tissue, same dozen of eggs, and you took everything to the counter to pay, and it was $100. That's what that means. It was $100 1 year ago. You go to that same store with that same list, buy the exact same things, exact same sizes, it would not be $100. It would be $108.50. That's an 8.5% increase buying the exact same thing that you just bought 1 year ago. That's what has happened with inflation. So that's how it affects us. So inflation affects all of us. I'm going to talk about it from the perspective of the stock market, but I'm also going to let you know it affects us too. You see it. If you see the effects of inflation when you go shopping, just put in the comments inflation with an exclamation point, because I know we're all seeing it. And I just want you to know you're not alone, and you know that you can see why now. It's expected, and it's going to go higher. It's going to go higher. We're going to talk about that. I hope it's not going to go higher. I hate to be, the bearer of bad news, but you need to know. You need to know. And I'm going to tell you, just as a hint, this is going to come later. When inflation is up, the stock market trades down. When inflation is up, the stock market's going to trade down. Why do you think I say we're going to pull back? And it started at the beginning of the year. And yeah, there's so many things that I'm going to talk to you about. Today's stock market is based on macroeconomic activity. Company stocks that go down has nothing to do with what the company's doing. It is based on macroeconomic activity. And I love macroeconomics. I am a geek at this, so I hope I don't geek out, but I do want to share this with you. So just know, when inflation is up, markets trade down. Put that in the comments. When inflation is up, markets trade down. I want you to know that. Remember that, because we're going to talk about this for the next 3 days. So with that, let's keep going. Y'all, this is getting gooder and gooder. I see one thing. He says, I got to show this one right here. So does this mean it's a good time to invest? Mm-hmm. Mm-hmm. That's why I'm here. Yeah. Yeah. You need to know what you're doing, though. You need to know what you're doing, because things are going to trade down, and they're going to trade down for a while. It's going to trade down, but it's not down every day. Yeah, it's a good time to know what you're doing. If you don't know what you're doing, you're probably all shocked and just, yeah. Okay. Now, let's move forward. So that was our inflation lesson for our day one session. In our next session, we're going to talk about what caused inflation and how do we fix it. I think in the next session, I'm only going to get to what causes inflation. I wanted to get to how we fix it, but I'm geeking out on this, so there's too much stuff. So with that, be here for day two session, and we will talk about inflation a little bit more. Okay. Now let's do stock talk. We're here to talk about the stock market. So with that, let's just say you have a friend, somebody that you know and that knows you, and they come up to you and they say, hey, have you heard of this stock? And they tell you the stock symbol. It's a good stock. You need to get in it now. You can make some good money in this. And you go, are you in it? No, not yet. But I got the word from somebody, a good source, that they're in it, but I'm not in it yet. So I'm telling you, you trade, don't you? You trade stocks, so you're kind of interested in the stock market. Yeah, I'm interested. So they say, yeah, you need to know about this stock. And you say, thanks, buddy. And so then what do? You kind of do some of this. I want you to know how to respond in that. And what you do is you respond and you say, thanks, buddy. That's all. But then I want you to have the skills to do what's next. And I want you to answer the questions, how big and how much. These are the two questions that I want you to answer. How big and how much. Now, don't ask these questions of your friend. You just have these questions in your head, and then you're going to answer the questions based on what I teach you tonight. Got it? How big and how much. Let's go forward. Now, what I want you to know is, how big is this company? They told you about a company and they said, this is a good company. I want you to know how big. The way we tell how big a company is not from a financial perspective. It's not by how many employees they have, or how big their headquarters is, or how many locations they have. We look at market capitalization. Market capitalization. It's called market cap. This is the total market value of a company. We take everything that this company has, every bit of their inventory, their buildings, their intellectual property, their inventory, their stores, any of the cash they have in the bank, accounts receivable. We take everything that they have and we take away all of the debts that they owe. And then that is the company net worth. So all the money that they make, take away what they owe, that's the net worth. And that is market cap for a company. So the way we look at market cap, it's calculated by taking the number of stock shares and multiply that by the price per share. If a company has 1,000 shares of stock available for sale on the open market, and then each share of stock is worth $1, then 1,000 shares times $1 is $1,000. The company net worth is $1,000, and that is their market cap. Now, the company size is determined by market cap. The reason I say you need to know how big and how much is because size does matter when it comes to companies. The thought pattern is that the bigger companies they tend to be more stable. The reason that the bigger companies are more stable is they've probably been around more. They probably have more solid contracts, which is guaranteed money. They probably have more savings and more investments. They have reserves set aside so that if we go into a pandemic, they have enough money set aside that they can survive that. So with that, the bigger the company is, what history tells us, the more stable it tends to be. Now, it doesn't mean that company is going to make the most money for you in the stock market, but if you say, I want to invest in a company that's solid, remember, somebody just told you about a company and you don't know anything about it. You want to find out how solid is this company. So market cap is what we look at, and size does matter. Take a look here. These terms that you see on the screen, mega cap, large cap, mid cap, small cap, micro cap, and nano cap. If you've heard of any of these, say, I've heard of these. And this is how we classify the size of the company. The mega cap companies have a market cap in excess of 200 billion. So when we look at a company, you kind of, when we don't say this company's worth $271 billion, no, we say it's a mega cap stock. Same thing, large cap, market cap in excess of 10 billion to 200 billion. So you can see some of that of how the market caps line out. Now, this is something that you are going to need to know for your homework if you choose to do homework with me. When you see the red star in the upper right-hand corner of the screen, that means that when you go, if you sign up to do the homework, this is one of the items that you can download. And you can save this on your computer and have it and reference it. So when you see that red star in the upper right-hand corner, that means this is a downloadable resource for you. And you can get that from Money Reverse University. We're going to give you the link to do that shortly. Okay? So market cap. I want you to know about market cap. Good deal. Now, I want to show you, even though I told you how market cap is calculated, we don't have to calculate it. It's calculated for us. All we have to do is look at it. Take a look at what we have here on the screen. I have an example of a stock quote from Coca-Cola. KO is the stock symbol. You see that circled at the top here. We can see here at the time of this snip, which was 4 p.m. at close, and this was last market close, which was this past Friday, which was yesterday at the time of this recording. So we can see that this stock traded at $65.25. And you can also see market cap. I have it circled here. Market cap for Coca-Cola as of Friday was $282.858 billion. $282.85 billion. Now, a mega cap stock from the chart shows anything that's over 200 billion is a mega cap stock. So Coca-Cola is definitely a mega cap stock. And you can see that the highest that we had on that chart was a mega cap. I think we got so many $1 trillion companies now. I think there may be a different market cap classification. I'll let you know. I'll look at that and see, because, Tesla is over $1 trillion. We got so many Apples over $1 trillion. There's so much abundance out there, y'all. I need to say this. There is a lot of abundance out there, everybody. Remember how I shared earlier how the stock market has just been climbing over the years, over the past year? I do want you to know that there is abundance out there for anybody that wants it. Okay? Companies are taking advantage of it. Mega cap over 200 billion was the highest market cap that we have, but we have many $1 trillion companies, trillion with a T. Okay? Abundance. I want you to put in the comments abundance if you can receive that message, because I want you to know that. I want you to know that there is abundance out there. And it's for you too, not just for everybody else. So if you can receive that, I want you to just put abundance in the comments. I just need to know that you're with me. Okay? So market cap. This is how we do how big. Okay? Now, remember I said when that person comes and gives you the stock tip, you are going to ask yourself how big and how much. Market cap was the how big. Let's talk about the how much. I want you to know about 52-week high and 52-week low. And how much has this stock price been in the past year? Right? He says it's a good company. How much has this company stock been trading at for the past year? 52-week high and 52-week low is how we're going to do that. And the 52-week high, this is the highest trading price at which the stock has closed in a year. And then the 52-week low is the lowest trading price at which the stock has closed in a year. Now, remember, I put the word closed underlined because I do want you to know a stock may go in the trading session, the stock may trade and it opens here. And the stock opens here and it may go up here, up here, up here, up here, and then it closes here. We get the open price and the close price. The stock has traded higher than that, but the 52-week high is the highest that the stock has been at closing, right? At closing. Which one did I do? Yeah, that's what I was doing. Yeah, closing. And the 52-week low, again, was at closing. So even though the stock may have traded higher or lower, that's called an intraday high or an intraday low. But the 52-week high and low is the closing price. I want you to know that, okay? We're going to be specific here. So when you look at the 52-week high and low, I want you to look at the spread, the difference between the high and the low, and just see what has this stock been doing this year, okay? Now, let me show you an example of this. Let's look at this same stock quote, Coca-Cola Company, stock symbol KO. And every time you're looking at a stock, it has a short symbol. So, and you'll see that in parentheses, but the full company name is right there too. You can still see everything about this stock quote because it's the exact same quote. The only difference is I have a different something circled. We don't have to go calculate 52-week range. It's right there. It's $52.28 and $67. $52.28 is the low and $67 is the high. Take a look at that. So if you say, oh, I'm not in the stock market because I'm not good at math. Have you had to do any math yet? There's people that do this for us. We just need to know how to read a stock quote. And that's what I'm going to teach you here for the next 4 days is how to read a stock quote and what this stuff means. So you can see the 52-week range for this. This stock is trading at $65.25, the highest it's traded in the last year. And it is a rolling year. It is a rolling year, meaning it is from late April last year to late April this year. So it's 67. So it's almost at its high price. The question is, will it go beyond its high price or will it get to its high price and say, if somebody asks you about Coca-Cola, I'm like, well, I need to look at more information because it could be almost unpetered out. It's at 65 and it's 67. It's the highest it's been in 52 weeks. What makes me think it's going to go higher than 67? So you need more information, but this is a good start. How big and how much? Okay. Now, that was the end of the instruction. I want to do this section of the teaching where I show you. I talk about it, now I show you. Let's see it. Now, the first thing I want to show you is what I have here on the screen is Yahoo Finance, www.finance.yahoo.com. www.finance.yahoo.com, and you can also download the Yahoo Finance app to your phone and reference it there. I like using Yahoo Finance, and I'm going to use this for the next 4 days. And I do want to show you that when you do stock research, you do not need to pay anybody to get information about stocks. You do not have to buy or spend money on anybody's software. Everything I show you in this course and in every course I teach you, I'm going to teach you how to do things with free resources. And hold on. The reason I'm going to tell you that is because when a company is publicly traded, they have to make this information available to you. The company is making it available to you for free. They have to be traded on our public markets here in the US. So you don't have to pay for this information. Other people are putting together software and the software is cool. And I do want, if you pay for software to research stocks, let it be because you've chosen to, because you see that software does something good for you. But please do not think you need to pay anybody any money for stock research. I hope this 4 days teaches you that. And if you take my full program, you'll say, oh my God, I had no idea that all these free tools were available to you. That's the way I've been doing it for years. Why am and I don't have a software product to sell you. I don't. So I'm going to tell you, if you buy into someone else's software product, let it be because you've researched it and you see that it's going to do enough for you that makes it worth the money. Okay? Good deal. Now, what I want to share with you here on Yahoo Finance is the first thing on the front screen. What I have circled here, remember how we talked about the major indices? When you go to Yahoo Finance or Google Finance or any of the finance apps, the very first thing you're going to see is the major indices. Take a look here, the S&P, the Dow, and the NASDAQ, and the Russell 2000. You'll see that these numbers are the numbers that I quoted for you, that the way the stock market ended on April 22nd. So I just want to show you how you can find it. Because what I did is I made it all cute and pretty and just put it for you and make it very clear for you. But I want you to know how you go find this information if I'm not here for you. Okay? Now, I'm always here for you, but if you want to see it anytime that I'm not live, you'll know how to go see it. So what we're going to do is we're going to use as an example, and I'm going to show you how to find the stock quote. Again, and we're going to use the example Microsoft. What I did is I had the stock quote for Coca-Cola all printed out and all circled for you. But I'm not going to always be there to do that, so I'm going to show you how to do it. We go to the front screen of finance.yahoo.com. And at the top here, where it says search for news, symbols, or companies, let's use as an example Microsoft. And we're going to assume that you don't know the symbol for Microsoft. So what you go right here in this search bar up here by Yahoo Finance, and you type the whole word Microsoft. When you start typing in Microsoft, even before you get the word finished, it's going to drop down and give you alternatives to select. And you're going to be able to see Microsoft Corporation, and you're going to click that one. Assume that we did that, and this is what you'll see. You're going to come up and you're going to see the stock quote for Microsoft. And I'm going to share some key things with you, and they're all circled. Number one, at the top, Microsoft Corporation, you see the symbol MSFT. So pretty soon you'll learn the stock symbols if you don't know them. But if you always want to look up a company and don't know the symbol, just put the whole company name and it will search for it for you. You can see the price for Microsoft, $274.03. Look at the red right next to that, $678. That means it was down $6.78 since the last time the market closed. So this was on Friday. Microsoft dropped $6.78, and that was 2.41%. So Microsoft was down on Friday. Now, what we talked about, how big and how much, let's look at market cap for Microsoft. Here it is right here. I have it on the right-hand side circled, market cap, 2.054 trillion. Now, what kind of company is Microsoft? When we look at market cap classification, do you remember what the biggest one was? Remember, our market cap classification, the highest one was greater than 200 billion. Microsoft is one of those trillion-dollar companies. Remember when I talked about abundance out there? Marcine got it. Marcine got the message. Yeah. May got the message too. We need to get the message. We got trillion-dollar companies everywhere. So take a look here. Does anybody remember what the market cap class is for Microsoft? If it's 2.054 trillion. If you know it, type it in the comments. Now, we can also look at the 52-week high and 52-week low for Microsoft. Take a look over here. It's circled as well. 52-week range, 238.07 and 349.67. Microsoft is trading down from its all-time high. The tech stocks have all been trading down. So Microsoft low is 238.07. What I found with Microsoft, I made some money on Microsoft recently. What I found is they'll go from 270 to 300 and back and forth. So you'll see a $30 price swing in Microsoft, and sometimes not that far. I typically would buy Microsoft at 280 and sell it at 300. That's $20. If I bought 50 shares, that's $1,000, right? So with that, if I bought 50 shares at $20, yeah, that's $1,000. So with that, I've kind of been doing some quick money trading with Microsoft because it's been bouncing around. Now it's at 274. I think it's going to drop more. I'm not seeing anybody put down what the market cap class is. This is a mega cap stock. This is a mega cap stock. A mega cap stock is anything greater than 200 billion, and Microsoft is 2.05 trillion. Yeah, there we go. Thank you. I see mega now. Okay, now let's look at another one. Oh, look at the red star here in the upper right-hand corner. If you want to download this one and keep it as an example, then you can do that when you go to Money Reverse University out there. It's in the downloadable resources for you. Now, let's go look at another example. Now, I do want you to know, let me flip back and look at Microsoft real quick. We can't see it here, but I'm going to tell you on the screen, you don't have to go back to the beginning. You can, there's always a place for another quote. If you look right here on the screen, I don't know if you see my mouse, but you see this green sign that says coin. Right below there, it says quote lookup. And it has a little magnifying glass there. You can always see that on any screen, and you don't have to go back to this front screen. You can just put the next quote or symbol or company name right there when you see where you see quote lookup. But for this example, I'm going to go back and say, let's look at Ellington Residential Mortgage REIT. That's the company we're going to look up. And we're just going to call it Ellington. We're going to go in Ellington and then type in res, and you'll see the company come up, and you're going to click on it. This is what you're going to see. Ellington Residential Mortgage REIT. The symbol for this one is EARN, EARN. Look at the price for this stock, $8.94. All stocks out there aren't over $200. There's lots of low price stocks and even lower price stocks because they're dropping now. $8.94, that's down 5 cents on Friday. So you can see this stock. Take a look at market cap for this stock. See it circled on the right-hand side, 117.203 million, over 100 million. So this is a micro cap stock. Anything that is below 250 million is a micro cap stock. So this is a tiny company. And then let's look at the 52-week range for this company. On the left-hand side, low, down low, it's circled. It's actually right there. No, it's right there. Yeah, right here. Look, I can do that. Hey, I'm cute. Look at me. I'm cute. If you think I'm cute, just put cute in the comments. I always wanted to do that. Okay, so look at the 52-week range. It's $8.61 at the low and $13.92 at the high. So this is a low price stock, Ellington Residential Mortgage REIT. So again, here is the red star on the upper right-hand corner. So you'll be able to download this one and use it as an example as well. So that is the demonstration. Now, if you got that and you would like to do some homework, I'd like for you to share with me. I want some homework because I am going to give you an opportunity to do some homework. Ha ha, look, somebody said I was cute. Hey, thank you. Okay, I get too amused. I'm sorry. Oh, super cute. Look at this. Oh my God. Yes, thank you. Thank you, y'all. I love it. Okay, so homework. If you want to do some practical application exercises, and I would encourage you to do so, I want you to learn. And the way, I promise you, the homework is not going to take a lot of time. And if you do the homework, you'll never. I'm looking at y'all's comments. Y'all gonna make me be here all night because I just want to show all y'all comments. Yes. So the homework is going to allow you to seal the deal. Homework, please, your cuteness. I'm sorry. Oh, Val says I'm cute. Hello. Okay, I need my virtual assistants to straighten me up because y'all got me cracking up. Got me tearing over here. Sorry. Oh, okay. Now, the homework, virtual assistants, can you put a link in the comment where everybody can sign up for the course? And it's a free course. We're going to get the homework link put in the comments here. Y'all got, while I wipe my tears. And there is a course, Stock Savvy session course, and it's free. I'm not going to ask you for anything but your first name, last name, and your email address. And when you go there, you can get all of the downloadable resources, and you'll be able to get the homework too. So we're going to get the link put out here. And I do see the link out here now. So let me know if you have a problem accessing the link. You may need to copy it and put it in your browser or click there. Just sign up, first name, last name, and email address, and you are in and you will get to the homework. Let me explain what you're going to see when you get there. And this homework is in Money Reverse University. Now, the homework for day one is I want you to complete the research on 2 stocks from the supplied list that's there for you in Money Reverse University. So when you go out there and you see day one homework, you go pull up that and you click the link that's there and you will see the list of stocks. And so I want you to claim 2 stocks at a minimum. You can claim more if you want. Claim 2 stocks by putting your name in the selected by column that says, I got this one. Now, once you claim your stocks, I want you to go out there and update for stocks. I want you to use the stock watcher sheet that's out there. And I want you to put down the stock symbol, the stock price, the market cap class, the 52-week high, and the 52-week low. So you're going to put in there the stock symbol, the stock price, the market cap, 52-week high, and 52-week low. Now, what we have out there for you is we have the company name. So the company symbol isn't even out there. So when you do that, and everything I'm asking you to do is what we went through here in the class. Now, what I also want you to do is to add at least 1 stock of your choice to the list, because you may have a company that you work for that's not on the list, or a company that you're interested in, one that your buddy said it's a good stock. Go ahead, add it to the list so that you can do, as we learn to do research, because we're going to continue to add to this research in every class. Add your stock to the list so you can do that research as well. Now, for your research, I want you to use, just like we did here at Yahoo Finance, www.finance.yahoo.com is the URL, or you can download the Yahoo Finance app to your phone. Either way will work. Let me show you what it looks like. When you get to the homework sheet, then this is what it's going to look like. You got the Stock Savvy homework, and look at the one in the yellow up here. This is one that my virtual assistant, Hetty Watkins, has completed for us, so you can see what it looks like. So with that, you'll see she chose PayPal, P-Y-P-L. The only thing that was there was the word PayPal Holding. And so she went in, pulled up PayPal Holding, and actually got the stock symbol. She put her name, today's date, which is the day she did it, which was the 23rd. And she actually put the stock price, the 52-week low, the 52-week high, and the market cap. Take a look at market cap. Market cap is a drop-down box. So that's where you're going to need to go to the downloadable resources and download that market cap classification sheet, because you'll need to know, is it small cap, mid cap, large cap, nano cap, mega cap. So go ahead and download that sheet. And all you're going to see here is, just like here, all of the company names. You go out here in the claim by, put your name there for at least 2. You can do a couple more if you want, because we got close to 150 out there, maybe 160 stocks. So if you want to do some more, feel free to do some more and add 2 at the bottom of the list so that we can have stock homework, stocks research for our next session. Now, if you have any questions, post them here, because when we get to this screen, I want you to know that that is our day 1 session for Stock Savvy. Now, I do want you to know, if you don't know me already, I want you to know I am a list person. Are there any list people here? People that just always want to have a list, and scratching things off the list makes you feel good. Sometimes I do things and then put it on the list so I can scratch it off. I know it's crazy. And then I have lists that are electronic, right? I have electronic lists. I even have an app where it crosses off and I actually see it cross through, because some people know that list people are out there. I am a list person. So look, I had to create a list of our Stock Savvy sessions. Our Saturday, April 23rd Stock Savvy session is complete. We're going to be here for the next 3 days at 7 p.m. Central, right where you're watching us right now. So just join us here, come back, have your homework done by the next session, because we're going to go further. I'm going to teach you a few more concepts, and we're going to take those same stocks that you researched, and we're going to do a little bit more with them. So with that, let me know if you have any questions, and I will look through the comments now and answer your questions. And if you learned something today, just say I learned something. So, oh yeah. Well, Marcine says she like a list too. Yes, ma'am. I am a list person. It's bad too. My family will tell you. They had to tell me on vacation long time ago, years ago. They say, put that planner book down. We are on vacation. Okay, so I do see a question that says, when someone gives you a stock market, should you be concerned about how they got the information, or if they work for the company, insider trading? Yeah, I wouldn't be concerned with that, because people that are insiders know that they're insiders. Insiders are company executives or directors. And so an insider knows that they're an insider, and they know not to do things like that. So if somebody is telling you information, even if they work for the company, they're not an insider, because they would know. And insiders would never do that. I was a corporate executive, and the company I worked for was publicly traded for a while, and then they went private. Actually, the two major companies that I worked for, where I was a corporate director, neither of them were publicly traded at the time when I was there. But I was at that level where I could have been considered a company insider, depending on how the company is structured. But with that, insiders know what to do and what not to do. So I don't think you need to be. I think you should be concerned with the information, but I wouldn't necessarily jump on them. I want you to just be empowered to go and do your own research, right? I want you to be empowered enough so it doesn't matter where the information came from. You're not going to take that as a grain of salt. You're going to take it with a grain of salt, and you're going to do your own research. So after these 4 days, I want you to have the tools to do that. So then you can go back and tell that person something, perhaps. Okay, good question. Let's see if we see any more questions out here. If you have any questions, you can type them in the comments now. Oh, I do see some of the things that we said. Yep. Everybody know when inflation is up, the market trades down. I just want you to know that. So when you start seeing markets taking a big dip, and it's not just one company, it's all the companies, that means there is a systematic downturn. It has nothing to do with what Coca-Cola was down. Ellington residential mortgage REITs was down. It has nothing to do with what those companies did. Yeah, inflation will do that. When you hear about inflation numbers going up, market's going to trade down. Okay? That is a good one to know. I want everybody to know that. Thank you for posting that in the comments. So I think one of the questions, I think I shared this one early, when we were talking about inflation and we showed how markets have traded down. I want you to go, if you get an opportunity, I want you to go look at the Dow, the NASDAQ, and the S&P, and look at the chart. We're going to talk about charts on Savvy Set Day 3, but look at the chart. It's right there on the front page of Yahoo Finance, and you'll see there was a huge market sell-off on Friday, our last close. And it was because of things that the Fed said. We'll talk about that. When we start talking about what causes what causes inflation and what fixes it, I'm really going to start geeking out. But I want to talk to you about, because it's not going to end. I'm only going to be here for 4 days, but I want to push you on your skateboard enough so that as we keep rolling down this road, you know how to maneuver on this skateboard. You know what's going on. That's what I want to do in the 4 days. So I know my session is going longer. I wanted to do this in 45 minutes, but it's going to be a little bit longer, this first one. But I don't think it's going to be, the other ones are going to be as long. Okay. So question, are these 3 platforms tracking the same products? And I know we were talking about the market indices, the Dow, the NASDAQ, and the S&P. So with that, I do want you to know they are all tracking U.S. stocks. but the grouping of the stocks are different. The Dow is the weighted average of 30 companies. 30 companies across several of the major structures within the stock market. We got some industrials, we got some financials, we got some tech stocks, we got some healthcare stocks, we got raw material stocks. So it's across all of the market sectors, and it's 30 companies, 30 very important companies in each of those spaces. The S&P is 500 companies, and that's 500 companies. The reason the S&P is kind of de facto standard, what we use to compare how the market's doing, is because it's more than 30 companies. It's 500. It's a bigger sample. And then the NASDAQ is a lot of tech stocks. So they're all tracking US stocks, but they're indexing different ones in different manners. And the formulas for how they come up with those numbers, they're very complicated formulas, and you don't really care about the formula. Remember, if you take a stock class and they want to teach you through how those indices or weighted averages are calculated, say, I don't need to know that. I know all I need to know is how the numbers compare to itself. You don't need to know that calculation. That ain't gonna help you make no money. If it ain't gonna help you make no money, you don't care about it. Be very selfish about this. Remember, I said abundance is out there. I just want y'all to know abundance is out there. And I saw some of y'all say it too. There you go. There you go. So I don't want you caught up in stuff that's not going to help you get there. So just like we did today, we compared them to each other. Okay, let's see here. I don't see any more questions. Let me scroll to the bottom and see if any new ones came in. On the Yahoo Finance page, I see another platform called the Russell 2000. Yes. The Russell 2000, the ones I showed you are the 3 most popular ones, but there are so many market indices. The Russell 2000 is really used to track small cap companies. Remember how we looked at the mega cap stocks, the market cap classification, and the small cap companies are those 250 million and below. The Russell 2000 tends to track the smaller companies because they trade differently than the larger companies. Good call out. The Russell 2000. It's out there and it's used, especially if you're interested in small companies and getting into small companies, because sometimes they move really well. The Russell 2000 kind of tells you how they're doing. But still, I want you to also compare that number to itself. And when you're on Yahoo Finance, there's a right arrow. You can go to the right and you'll see other indices. You'll see Bitcoin. You'll see the US dollar. You'll see oil. You'll see so many things that tell you what's going on in the market. So I'm just, in this 4 days and this 45 minute, I can only give you a little bit, but I'll tell you later on in the week how you can take more classes from me. And I'll tell you everything you need to know, okay? Okay, so what do you think about companies that make vaccines? They are free now, but will it change the market for them if they start charging a fee for the vaccine in the future? Good question. Companies that make vaccines. Oh yeah. Now the vaccines are free, but they're free for us, but the vaccines are being paid for by our federal government because of the pandemic. So these companies have made lots of money. They've made millions and millions and millions. And there's even conspiracy theory that say the reason that the US and countries are pushing vaccine is so that these companies can make money. It's true or not, I got my vaccine. So there's the conspiracy theory is that you don't really need a vaccine, is that, companies are just trying to get money. And that may be true. But I can tell you, I have traded the vaccine stocks so much last year, and I have made so much money on those vaccine stocks. Let me tell you, even companies that didn't even have a vaccine out yet. Let me tell you who I traded. I traded Moderna. I traded Novavax. I traded Pfizer. Pfizer really didn't do very well. BioNTech is the German company that made the Pfizer vaccine. So Pfizer really didn't benefit from that. But BioNTech, yes, ma'am, that company did well. AstraZeneca, and also not only vaccines, but also those people that make tests, that make COVID tests. The same thing about COVID tests. COVID tests are used by cruise lines, by airlines, by individuals, by doctors' offices. So that's a big money maker too. So vaccine stocks and COVID tests. And we've been trading those stocks for the last 2 years, and we have made big money on them. Now we're not making money on the vaccine stocks anymore. I think that they've kind of played out, because the money that they made, they were paid by the federal government, and that was for large batches of vaccine. Now, if we see COVID ramp up and get out of control again, and they have to start making more vaccines and selling more to the federal government, then they will make more money again. But yeah, that has been those have been major money-making opportunities for me in my quick money trading. I have a group of day traders that I lead, and we make money in the market every day. We make money in the market every day. Vaccine stocks has been something we've been on for the last 2 years. Okay, on Yahoo Finance, I see another. Okay, yes, I see them. Where do I find the homework? Okay, now if you go to the homework, I want you to go to look at the link here. Can we get the link posted here? I want you to sign up for the class in Money Reverse University. If I can get my virtual assistant, Hetty Watkins, she's posting a link here. So go and sign up for the class there. And once you go there, you will see day one homework. So it's in Money Reverse University. You will need to sign up for it. And we got a link posted right here. So go ahead and sign up, Val. I'm looking forward to seeing all of your homework. So I'm not seeing any more questions. So I am going to say good night, everybody. We are going to be here tomorrow at the same time, right where you're watching us right now. So join me. And if you think this will benefit some more of your friends, can you just share this out, share out the information? Or when you come back tomorrow, when the session starts, just share it on your timeline as it's live. That'll be a way that you can do that and help everybody else learn something for National Financial Literacy Month. But even on the first day, I saw some people say, they learned something. I'm like, yay. Great. Sheila says, I learned something. Yes, yes, yes. See, I certainly learned something. Amen. Because that is my goal. If I can teach, then I am going to say good. I love doing that. So with that, I'm going to say have a great evening, everybody. And I'm looking forward to seeing your homework tomorrow. And we will be here for Stock Savvy Sessions Day 2. And we'll talk more about inflation as well. Have a great one. Bye.